Why is it bad to use hard stops when day trading? Why do I use mental stops? We're going to talk about it in this video, breaking down the reasoning behind this theory. Stay tuned. So people keep asking me, why do I not use hard stops? Why don't I put hard stops in on my trades? Why don't I just lock it in? What's the big deal? Why do I always use mental stops? Or what kind of stop am I using? First off, I'm not using any stops. It's all mental. And I'm not trying to I'm big bad Mr. Day Trader. I use mental stops. I'm going to explain to you the reasoning behind that and why I use mental stops. And you can give an idea here. So this is HTZ on the chart here. We're looking at this one. It's been bounced around the last couple of days. But I'm talking about, first off, we're going to talk about from the long idea. If I'm going long here on HTZ, why I want to use a mental stop and why I don't use a hard stop. So looking here at HTZ, let's say I went long here at $18. It got back above $18 there. I probably wouldn't have actually done that. But if I would have got long here above $18, above that whole dollar, where would my mental stop be? What would the plan be? First off, if I got in there at $18, right there, $18, my stop probably would have been like $17.90. Mentally, what's the deal here? So looking at this, you can see $18, it jumped up there a couple times, $18.16. People probably got in there at the break of $18. It ran up here to $18.18, and then they put their stop there right at $18 because they don't want to lose. They're like, I'm going to lock it in, put my hard stop there. Well, what happens is it bounces here $18 a couple times, bounces, and then boom, get this little quick drop down there to $17.94. My stop would have been at $17.90, mentally, so I would have been fine, but for everybody who put their hard stop at their $18, they got their shares stolen away from them quickly on this drop. So, if people would put their stop at $18, boom, it drops to $17.94. They all got out there. People bought it up. And what happens is the market makers can see your stops. They can actually see when you put your orders in there on the level 2, they can see all the stops. People have stops in those areas. They can see the orders sitting there. And if they see your order, what they do is they just drop the stock real quick. They drop it, they grab your shares cheap, and they run the price back up, which happened perfectly here. It dropped down below $17.94, back up there to $18.18. Kind of did the same thing, bouncing off the $18 area up there to $18.38. So that's one of the main reasons I don't use hard stops. You can see the market makers do this. They do it every single day. They run these prices up and down. They take the shares away from people. They just running stops because they know they can do it. And it's easy for them. They know the $18, people are going to put their hard stops there. They're going to take your shares from you for cheap. And they know where those stops are going to be. So they see that stop area. They take those stops. They run the price down really quickly, they bring it back up, and they move it price higher, and that's how they control the price of the stock. That's how they get more shares, they sell shares, all that kind of stuff. They do in it, and they're seeing your hard stop sitting there. So that's one of the main reasons I don't use hard stops. Why should I put my hard stop there and let the market makers take my shares cheap? So I'm playing every stock with a mental stop, and that's one of the things you got to think about. If you have problems cutting your losses, people say, oh, why use a hard stop just because that forces me to get out? Well, you really need to focus on your emotion about that and being able to just mentally get out faster. A lot of times what happens to me, at least, is I will actually put my mental stop. I'm like, okay, $17.90 is my mental stop here. And let's say, it starts to drop. I see a lot of sellers. I see a lot of bad stuff going on there. I see level 2 sellers stacking up there. I might just get out earlier. So I'm able to cut my loss earlier a lot of times than I plan on it. I kind of give, worst case scenario, $17.90 being my stop there. So if I see a lot of selling going on, I don't see any buyers stepping up there, I might get out earlier. So that's one of the things to think about when you're trading. Using a mental stop, you need to have that fortitude. You need to be able to cut your loss fast. Another reason that I'm not using mental stops is you'll get these stocks that have these little quick jumps. Let's say I shorted here at 18.28. I was like, okay, this might go back lower. And then I'm going to put my hard stop at 18.36. So I put my hard stop there at 18.36. Well, look at this. It jumps up there at 18.39. I would have gotten stopped out there. I would have paid a premium. And then boom, it crashes down here to 17.90. So I would have gotten out there. Hard stop would have taken me out, and I would have gotten out of this trade for a loss. And then look, it moved lower just like I had planned. So that's one of the reasons I'm not using hard stops, because a lot of these stocks, they move fast. They move up and down really fast, and you'll get taken out on these little jumps. 18.36 was clear, double top there at open. Had that trouble again, same kind of selling area. 18.36 holding it down. Had that little quick pop. The seller probably just let them run it up there real quickly just so they could crash it back down, get some more shares filled higher. And that's exactly what happened. I'm watching level 2. I'm watching time and sales. I'm going to make sure the move is real. I'm not going to just put my hard stop there at 18.36 and get stopped out. I'm going to look at this and be okay, it's moving higher, but there's not a big increase in volume. I know that sellers there is a big seller there at 18.40 area, 18.38, holding this down. So I'm watching level 2. I'm watching time and sales. If I see 18.38 getting eaten out there, if I see volume increasing, then I'll get out. But if it's a fake move, if it's just a little quick jump, I'm not going to put a hard stop there and get taken out. People buying it up a little bit, and then getting crashed down. You can see later on it went back down to the 1770 area in the day, but you can see those are two reasons I don't use hard stops. I'm always using mental stops. I need to go into every single trade knowing my plan. If I go into this trade, I know my stop area is going to be that 1836, but then I'm watching it very closely. I'm watching level 2, I'm watching time and sales, I'm watching the volume. I'm really making sure that that move above that stop area, that mental stop, is a real move. It's not just a fake out. You know, sometimes you get these little fake outs above that resistance, you get the big crash afterwards. So that's exactly what happened here. And like I said, you need to go into every single trade with a plan. You need to know exactly where you're going to cut your loss. You need to have an idea of where you're going to take profit at. And when you go into a trade with those ideas, it removes a lot of the emotion that people have when the stock does start to crash or when it does go up and they're not able to cut their loss or they're not able to take profit when they have it, because emotionally they're like, oh, this is going to go lower. When you go into a trade knowing kind of where you're going to take profit, knowing where you're going to cut your loss, it's a lot easier to do those things when you have that idea of what's actually going on. This is a clear example looking at HTZ why I never use hard stops. Like I said, if I would have shorted it here, it would have got above that 1836 for just a split second. I would have got stopped out there and then boom, it crashes. So got to be very careful when you're using those hard stops, and I'm always using mental stops. I'm watching every single stock that I'm trading like a hawk. I'm watching level 2, I'm watching the time and sales, and I'm making sure those moves are a real move. It's got real volume, real power behind it. If it's just a fake out, if it's just manipulation, I'm going to sit back and wait for this to drop. So I'm combining everything that I'm watching here, and you can see HTZ showing you exactly what would have happened if I'd have had a hard stop there to get taken out, losing out on that trade. So those are two reasons that hopefully you guys understand a little bit better why I do not use hard stops. Am I telling you to not use hard stops? No. If you need to use hard stops for, like I said, the emotional idea that you can't cut your losses fast enough, that's fine. Go for it. Do it however it works for you. If you're not able to watch the stock all day long, if you're not watching it every single minute, every single move like I am, this is how I trade. This is how I use mental stops instead of using hard stops to benefit my type of trading of how, I'm watching these stocks very, very closely as I'm in the trade. I'm not going to let this thing run up higher. I'm not going to let it just crash and not take profit. So on that note, hopefully it helps you guys. If you haven't already, make sure you subscribe to the channel. I'm uploading daily videos every single day, basically. And hopefully you guys are going to learn a little bit more from these videos, because if not, I'm just wasting my time here. Remember the #1 saying for everyone out there in the stock market world: bulls and bears make money, but pigs get slaughtered.